I think that to me, hedging is the most important thing you can do because it allows you to stay in the market at all times. And I think that is the key because we all know that markets themselves continue to go higher over time. Okay. And I know you agree with that, but you and I were talking and I said, we should really tell some of these stories to our members and listeners because, it's a very scary time in the markets right now. Don't you think?
I do. And Bubba, you know me and I know you. And one thing that we both don't do is operate out of fear. However, we're vigilant. These massive corrections tend to come out of left field. And after they happen, it's always like you look back and you say the writing was on the wall. The writing was on the wall. In 87, the writing was on the wall. The writing was on the wall in 1929, although that was a little bit before both of our times. The writing was on the wall in 2008 and the years before. It was just a question of when it came. I will say this is a time where really probably the most in my career, and that goes back to 1980, where the writing is on the wall here.
Yeah, I would agree. It's again, we do not believe in preaching fear. We do not believe but we're just giving you what we believe to be fact. Okay.
Vigilance we preach.
And fact is that it is a very scary time. And, I've been through, I traded on the floor 87, 2001, and 2008. Okay. And I can tell you that the warning signs now are worse than they were then. Okay. Because of what is going on in the world and in the country and what we're trying to do. So it's a very scary time. And you've got, the doves.
Let me just add something to that. Yeah. In those years, the shifts were economic. We saw a lot of economic things on the wall, a lot of economic signals that triggered those corrections here, and markets reflect the economic and political landscape. Here, we're seeing both political and economic signs, big shifts in policy, big policy shifts across the board, big shift in power in the world. The writing is like, it's an indelible ink, in my opinion, on the wall right now.
No, I agree with you. Again, like I said, it's something that it's nothing that you can act on at this moment, which is why you hedge it. It's something that you look for going forward. That is, look, we've all seen or lived through many of these market collapses. Many of us have had times where we've panicked out. And my goal is not to have anybody ever have to panic.
I agree. Also, we listen. I know you don't listen, but we all, sometimes we listen to these people on TV. I always have it on in the background because I like to laugh while I'm writing during the day. And in September and October, all we heard about is seasonality, big correction coming. Now it's like, big sigh of relief. The period has passed. The risk period has passed. To me, that's the scariest thing.
The scary thing to me is that Buffalo's up to 6.5 over Tennessee tonight. And that I'm probably gonna have to bet Tennessee now. Anyways,
that's scary, by the way.
It's very scary.
I think Buffalo's the best team in the NFL.
I do too. The Fed loses control, and this is a quote from Larry Summers. Okay, who was a Fed chair, and
he's a Democrat.
Yeah. Woke Fed risk losing control of inflation, says former Treasury Secretary Larry Summers. Summers warns of 1970 style inflation. Now, if you were around in 1970,
folks, this is a Democrat. This is not, Fox News and the anti-Biden. This is a guy who was in the Clinton administration. He was the head of the National Economic Council under Obama. This is a serious liberal Democrat, Harvard professor, who is saying something that, it's very important what he's saying. But and he's not getting a lot of press.
Well, and it's funny because, again, the very fact, based on his education, based on where he's from, based on who he is, For him to say this he's like putting out a banner for everybody saying, hey, there could be problems coming here.
Right,
Because
so let's define that. Let's define that. When he says woke, what he's talking about is that the people at the Fed are thinking more about how they can use monetary policy to help with climate change than they are with battling the CPI data and the other data that's staring them in the face. That's what he's saying. They're being blinded by political agenda rather than doing their job, which is maximum employment and stable prices.
And isn't that the truth when you think about it? And that this has been always one of the major concerns that I have. Okay, is that we tend to the Fed original design supposedly was to be independent. It is a private corporation for those of you who don't know. Okay, the name the Federal Reserve was so that they tied it to government by name. Okay, but now suddenly they have become much more political than they should be, than they're supposed to be. And that is a much bigger problem for all of us. What say you?
It's absolutely true. But when a member of the ruling party says, whoa, and he's an economist. I mean, this is not a stupid guy, Larry Summers. He sees the writing on the wall. It's not just him. You're hearing this from other big economists. You're hearing it from Mohammed El-Arian, who used to be the chief economist at PIMCO. He's now at a European bank. A smart guy. This is a guy who went to school in Oxford. He's a very smart economist. They're all saying the same thing: expect volatility. But when you have Fox Business News on, or you have CNBC on in the background, they're all breathing a sigh of relief. Oh, we're almost done with October. It's like it's a magic month. Listen. When these corrections come, they come from left field. They come when everyone is complacent. They come when everyone is comfortable.
Exactly.
Don't be comfortable. This is the time to hedge. This is not a time for comfort at all.
Never. Exactly. Because again, you get to a point, and we've seen it, and you're already seeing it in some of the commodities that we've shown you. Okay, look, again, I am not preaching anything but to be safe and to be protected, but yet being able to participate in a market that has proven over its history that it goes up 8.5% year over year.
Right. And I'm also not saying, hey, this is the time to go out and buy a slew of put options on the No. What I'm saying is you have portfolios. This is your future. It's a time. We have, look, Bubba and Tom, they've created incredible models that allow you to increase your positions and protect the price on the downside, participate on the upside. It's the best of both worlds. If you don't have
that money, baby.
If you're not using these models, if you haven't used them, if you've resisted it, this is the time to do that. This is absolutely the time.
As I couldn't agree with you more, and it's just because it's what we do, and it's what I believe in, and I know that either I just don't want people to panic out, and you got inflation, stagflation, hyperinflation. One of those is going to happen. We've already got inflation, which is really a lot closer to hyperinflation. What say you, my brother?
I would say that the one guarantee is you're going to see inflation, some kind of inflation, and that inflation is going to erode your savings. It's going to erode your nest egg, and it's going to make prices go much higher, and it's going to make life very difficult. And it's not transitory, folks. It's going to last a while. The Fed is wrong. I mean, the Fed is wrong. Larry Summers is telling you the Fed is wrong. That's an insider.
And don't kid yourself. Then you have to be invested. You cannot hold cash, because what happens to cash that you're sitting on? Okay, that's not invested anywhere. It erodes by itself. Okay, the cash, the value of that dollar continues to fall, because that is what the central banks around the globe want to happen. They continue to depreciate your dollars. So you have to be invested in investments that create return over time. And you want to protect those investments over time because if you're sitting, let's say, with $1 million in green $100 bills right now, okay, it gets worth less and less every single day.
That's right. And you know what? The other thing is that the tools that Paul Volcker used back in 1980, they can't use those tools now because of what I said in the first segment, and I'll repeat it now. A $30 trillion deficit, 1% Fed funds rate costs $300 billion in debt servicing. The bottom line is they, because of this monetary policy, because of the fiscal policy, because of the size of the debt, they're handcuffed. Their toolbox is empty. And they're behind the curve. They could have addressed this months ago. They could have started to address it. They haven't even started now. And the latest CPI was very ugly.
They keep hiding from it. It's like it doesn't exist. Okay.
Maybe if we don't acknowledge this, it'll go away. That's the attitude.
It is sad, but it is funny. And of course, rising taxes. You don't think that
the double, and we call that the double whammy. If there's writing on the wall, this is big graffiti too on this wall.
Okay. I mean, what do you think is going to happen to the American countries when they see that they're paying more taxes and they can go back to what they used to call inversion? Okay. And they're going to start leaving again. And who do you think pays for just that? Forget about your own taxes right now. Who do you think pays for all these expenses that they're going to pay? They're not going to pay it. Either the shareholders are going to pay it, the consumers are going to pay it. These are very, you may think I'm, blowing smoke here, but this is very serious issues because, McDonald's, these prices never come down. Starbucks never comes down. They've gotten these prices so high right now, and they're going higher.
And CEOs are not going to let their shareholders pay it. They're going to pass it to the consumer because inflation's going up anyway. So why not let the prices go and blame it on inflation? It becomes very easy. It's a smokescreen to pass along the higher corporate taxes in the product costs. I mean,
so, and if you don't think that, that right now the big talk is, tax the rich, well, I got news for you. If it wasn't for the rich, we wouldn't have companies that were out.
This one? We heard this one. Oh, inflation is a high class problem. Hey, a high class problem. I went to fill up my car with gas. It cost me $80 to fill up my tank. When I go to the supermarket, the price of everything is double now. This is not a high class problem. This is everyone eats, everyone powers their lives, everyone gets an electric bill, everyone gets, these bills. This is not a high class problem. There's smoke and mirrors out there, folks. Look past the smoke and mirrors. And when you look past it, you see the writing on the wall.
And of course, John F. Kennedy said, high income tax rates not only check consumption, but discourage investment and encourage the avoidance of taxes rather than the production of goods. Our present tax system reduces the financial incentives for personal effort, investment, and risk taking. Okay. Now, again, you can laugh at that, but the same thing that was said in 1960 is true in 2021. And if you think that only the people that make 400,000 are going to get taxed, you better think again, because it's going to we know that the good economies don't typically trickle down as much as they should, but the problems always trickle down to the middle class and below.
That's right. And we hear that every day. So if only $400,000 and up are going to get tax increases, why is the IRS going to start looking at bank accounts with $600 in it?
Oh yeah,
everyone's paying. I got everyone's paying, folks.
Right? I mean,
everyone's paying.
I mean, it's amazing.
Okay. And by the way, the people who can afford it the least will wind up paying the most, which is so sad.
Well, yeah, because they're going to pay the biggest percentage of their income.
Yes.
Okay, or their stimulus check, one of the two. Okay. So again, you think that these are smoke screens? These are real problems. This is the handwriting that we talk about all the time, the supply chain. Now, this is another big problem. This is going to affect farming America. Okay. The fact that we can't get people to work, you can't get the goods to the stores. Okay. Look at what's going on as we talk about almost every week in Long Beach. How many ships are in Long Beach right now, Tom?
Oh,
I know he's here.
so many.
I think he said 40 or 50 are lined up and they can't get them offloaded. And that doesn't count New Jersey. The two biggest ports are loaded. You can't even, it's like a traffic jam in New York on Friday afternoon. Okay.
Let me just interject something here. Ask you a question.
Yeah.
You hear about something called the metaverse?
Yeah.
Okay, so the metaverse is, this fantasy world inside technology where all of this interesting stuff is going, and where Silicon Valley is telling us, and all the tech companies are telling us, that the metaverse is the future, the metaverse is the future. And to me, when I hear that, it's like they almost want to make us like not look at what reality is. There's no writing on the world in the metaverse because everything is wonderful in the metaverse.
Well,
But we don't live in the metaverse, folks. We live in a real world.
You know what? And
we're going to continue to live in a real world.
You can't eat in the metaverse either.
No, you can't eat. You can't drive your car. You can't do anything in the metaverse. What can you do? You go play video games. You could do all this kind. You could go to all these alternative reality. It's like almost like it's almost like a opium haze that technology is trying to put over people. To me, it's ridiculous. We live in the real world, and the writing is on the wall.
It is. And look, as I tell you, I go back. Obviously, I've been trading since 1980 myself. I've been a member of the floor. I'm still a member. But, in the 90s with the internet bubble, it was like, well, companies didn't have to make money. They were going to Pluto every day. And of course, where are they all now? They're all broke. Okay. Only a few survived. And this is the thing that you should be thinking about right now. Okay. Is, if we can't get goods to market, who's going to make any money? Okay. And the more the governments try to penalize that, okay, by adding on extra taxes, it's going to come to a head at some point. Nobody knows the answer when that's going to be. But once again, it makes a hell of a lot more sense to insure your money like you insure your life, your health, your car. Why wouldn't you insure your capital? It makes no sense because these things are real. This is not imaginary. This is not the world's coming in. This is a fact of life. It has happened many times in history, and this is the worst that I've ever seen. I'm only 65.
You know what, Barbara? You can't have your appendix removed if you have appendicitis in the metaverse. You can't eat dinner in the metaverse.
You mean
you can't have your teeth cleaned? You can't have your teeth cleaned or extracted in the metaverse. We live in reality. We don't live in the metaverse.
You take me to dinner in the metaverse?
To me, it's a smoke screen. It's a smoke screen. Wake up, folks. Wake
up, America. Everything that's being done. And again, I'm not blaming one government or the other. Listen, they're all crap. That's we know that, right? Let's not,
And it's not even government. It's private. It's tech.
Right.
It's Silicon Valley. It's technology companies. They all want to make money. The metaverse. They're going to make a lot of money in the metaverse. We don't live in the metaverse.
Do you remember when the debt was, close to zero, and now it's 33?
Right. And that's, by the way, that's what I was going to say about Volcker. When he was able to really put the brakes on inflation in 1980, how big was our debt? It's not even on that chart, right, Bubba?
Right. It can't be on that chart.
Right. So the point is that you got handcuffs on the Fed. They can't do what Volcker did.
Right. Listen, you imagine everybody going back in the CDs at 10, 12% again? I mean, listen, this is the destruction in which they have done, and it can only get worse, which makes these stimuluses and these packages that they're trying to get done even worse, because again, it's going to have a dramatic effect moving forward. And again, is it tomorrow? I don't know. Is it a month from? I don't have a date. They don't tell me the date. I don't get a telegram of when it's going to come, but you can bet your ass it's coming. Okay. That you can bet on. Okay. And, there are risks and costs to action, but they are far less than the long range of risks of comfortable inaction. And this is, think about it. If you've ever been involved in a market and not hedged, Okay. And when you panicked out, and for like those, there are some here that panicked out in 2009 and still have not gotten back into the market that's up 250% from the bottom. Okay. Think about that for a minute. Okay. You know, you need and want the ability to stay inside the market so that you can benefit through those market conditions that you know are coming, because they always come. This is not something new. It's not gonna, it just, there'll be a different reasoning. And unfortunately, as they always tell the story, 20 years from now, they'll tell you why what happened when this happens will be the answer. When we know right now why it's happened, and when, we don't know when, but we do know the why already. Would you agree with that?
I would, and we don't want anyone on this call or anyone who we write for or talk to, or we don't want anyone to suffer the kinds of potential problems that are out there. You know, it's going to be very difficult for someone to come to us after, you know, a massive correction and say, you know, I didn't listen. What can I do now? There's nothing you could do at that point. There's nothing. So now is the time for action. Now, when you're comfortable, is the time for action, not when you're uncomfortable. Now is the time where you think rationally. That's the
planning.
key.
You know, you do your financial plan, your financial plan. You plan for what can happen so that you're prepared when it does. Remember, our whole
by the way, you buy car insurance in case you have a wreck in your car. You buy home insurance in case your house catches on fire. You buy life insurance to protect your family. The bottom line is, you know, this is the time. You got to read the writing on the wall, and you can't afford to be inactive right now.
No, you have to be, again, our whole mantra is be prepared, not surprised. And you really give up nothing overall because of the compounding effect you're going to benefit from in the future. So as I say, look, we don't preach anything but being prepared, because markets go up, they go down, they go sideways. We get chopped up some places, we make money some places, but I know one thing for sure. My core portfolio, what I call in a gambling terms, my case money is protected. I am not putting that at risk, just like I'm not putting my home at risk without insurance. I'm not driving without insurance, and I would never let anybody drive my car or act without insurance around me. And I think that's the most important message. And do you have any last final thoughts on why you should be hedged right now?
I do, because I never want to say, and I've trained myself over 40 years, I never say I should have, I would have, or I could have. I only say I can, I will, and I do.
And with that, that's why you should always be protected, because again, we're not saying it's tomorrow. We are saying that it is inevitable that it happens. So we want you to be prepared so that you don't come back later with a position and say, what do I do now? Or suddenly you've become busted. Okay. And that is not a good feeling. I'm sharing that with you. So for this, I will shut this recording off and we will get the actual Monday call going right now. Okay, hold on one second. But remember, protect yourself, protect your family, because without it, you got nothing. Okay, yes. Okay, now let's go to stage 3. What's up, everybody? Welcome aboard. It is the Monday night call. After hours of chatting, and you know, Andy, I said earlier, I said, maybe I'll just go to 24 hours. Yeah, I'm always on a webinar anyways, but in the meantime, markets were, you know, kind of interesting today. I mean, you know, they opened last night under pressure, but by the end of the day, Nasdaq was exploding higher. The S&P was popping higher. The Dow and Russell were both lower, but not dramatically. But suddenly, it looks like we want to run to highs and not the lows. I don't know. I mean, again, I don't try to predict it. I just watch the price action, and basically our positions are now net long anyways. And what do you think of the action today?
I think it's more the same. You know, it's kind of like everyone expected all this. The financial media is pumping this seasonal juice into the market. It had everyone all scared for a couple of weeks, and now they're breathing a sigh of relief, and everything is wonderful again. And you know, everything isn't so wonderful. But the trends are our friends, and we got to stay with the trends because I'm happy to get chopped up in the short term and ride the big winner. That's
I agree. I know it's hard sometimes because sometimes the beating is bad, but at the end of the day, it eventually pays off, and it pays off in spades, as they say. And
That's right.
but
you got to be there. You got to be there.
got to be dressed, and of course,
got to be dressed for the dance.
you got to be dressed for the party. There's only one side of the stock market, and it is not the bull or bear side, but the right side, and that is what we try to always be on. And again, obviously, we have gone through some rough stages and rough times in life, but at the end, it's like hedging. It's like everything else. You got to be ready and dressed for the party. Okay, but because if you're not dressed, you don't get to participate. So that's why we always tell you the market is always right. And as I give you my thoughts, the market's reversed. Okay, again, I didn't think it could happen. I really thought that we were headed south for the winter, and suddenly we've got a trend reversal, and we're now long. Okay, and look, I'm long. Okay, listen, I'm not going to fight it. Can we go up 25%? I don't think that's likely, but certainly I could be wrong. And I'm not going to, who thought that that sugar was going to go from 9 cents to 20 cents? Who thought that cotton was going to go from 50 cents to $1? So
who thought that lumber was going to go from 250 to 1700
and then back to 400 or 500. I mean, who knows? Again, it's something that you have to, that's why when I tell you when you play the trend, who thought, well, Facebook got earnings coming. So you thought they would. But this is why preparation for whatever's going to happen is important, because you will get paid if you prepare properly and you stay away from being too leveraged. Now, the cancel culture, I think it's destroying America. You have any thoughts to that?
Yeah, I mean, look, it's it's more of the smoke screen and trying to we're trying. There's a group that's trying to reprogram us, and
right.
I can't reprogram me. I'm an old dog.
Yeah, well, you and me
can't
both.
Teach me no new tricks.
You know me. I ain't changing either, right? I mean, that's just the way life goes.
I got my views. I have my views, and the core of my view is to accept and respect all other views. Where you lose me is when you don't respect my views, because I respect your views. No matter how crazy, I respect your freedom to have a view.
You're right.
I respect that. But if
you're American,
my
right
view, you'll lose me. How's that?
That's what your military fought for, was for your right to listen and their right to say what they want.
That's right.
Okay.
That's right.
That is what we fought for. That is what this country fought for. Okay.
You never say to someone you're wrong. You say, I disagree with you. You're not wrong. I don't have a monopoly on the truth. No one does. Someone says to me, I disagree with you. Okay, let's agree to disagree. Let's discuss it. If we can't agree, let's agree to disagree.
Well, I told you.
But when you turn someone off because they disagree with you, then you know what? Then it's your problem.
Then you're a schmuck. Anyway.
My problem.
Again, that's, I told you a story about Pam and her friends, and that was a very sad story, but it shows the colors of where we are. Yeah. In the meantime, the U.S. debt, which we've talked about, is out of control. I mean, this is, and the $2.5 trillion spending and higher taxes and more. I mean, this is the things that we're talking about that become really a potential huge problem. Now, so far, we've been able to stave off some of this, but the only hope that we have, in my opinion, right now, is that as we near, the election is a year away. Okay, and the moderates are not going to want to give up their office if they do something that causes too big of heartburn for many, and that could slow it. But what do you think here?
It's funny because the election, we're not even at the midpoint. Next month is the midpoint, right?
Mm-hmm.
And look at what's happened since the last one. Oh my God. So, and really it's since January when, the majority went in all three houses. There's a lot of time for a lot more damage.
Yeah.
It's unfortunate. It's scary, actually.
I
You
think
know, look,
I agree.
it's out of control, but you know, it is what it is, and you know, you know what? There's an old saying, Bubba. Even a broken clock is right twice a day. This, to me, a lot of the things that the government has done, they're a broken clock that's not right twice a day. They're never right.
Well, you know what? Because they're using military time.
I mean, right. And you know
2400
what?
hours.
Right. And now, you know, California, which is the great leader of the country, you know, they're going to ban gas-powered leaf blowers and
And
lawnmowers. What are you? What? That's insane. This is insane. And not even in 2024. You know, blink your eyes, and it's 2024. This stuff is ridiculous.
And what's amazing about it is get fake grass then. If you don't look, you know, the companies, they don't have the power grid to handle all that stuff anyways. And on top of it, some companies will get very wealthy in this.
And they're gonna hurt the people that you know, laborers who depend on who you know, who's cutting the lawns of the rich people there. They're
Right.
people who are hardworking people who are working.
Why Bezos doesn't cut his own lawn?
You know what? The bottom line is a very, very frightening situation. It's not just cancel culture. It's, as Larry Summers said, woke. He said he warned us about being woke at the Fed, and that they're too woke. It's not just the Fed. It's the government. It's everything. People. It's whole woke culture. Woke. I mean, it's like a woke coma to me.
Is that like a yoke? In the meantime, our words of wisdom, which is the official kickoff from Connie: live as if you were to die tomorrow, learn as if you were to live forever. And you know how I continue to preach, trying to learn. You know, I never liked school, but since I got out of school, I've been trying to learn something every day. Okay. And Andy happened to be a genius, and his kids are geniuses. So they like school. They did well. But I mean, again, it's about learning, about people, about everything, about markets, everything you need to continue to learn. And you may not be here after tomorrow, but you can try to learn like you'll be here forever. And I agree. Connie, great as always.
It's a great saying. It's great. I mean, you know, that's remember that. It's good.
Every time I hear Gandhi, I remember Elaine Benison.
Yeah. And Seinfeld. You have to try to learn every day. Life, from the minute you're born to the minute you die, is a learning experience.
And of course, her new category, which is the State of the Union, and that is crumbling freedom. Now, you may not recognize it, but even with what you mentioned a little bit earlier, $600 in your bank account they're going to be looking at now. Okay, really? Okay, you know, it's hard to get cash or deposit cash in a bank without having a major investigation. Okay, it's amazing. By the way, Mike, the euro currency.
I guess I'll have to take out 500 when I go play poker. I can't take 600 anymore.
Right. The euro currency just opened flat from where it closed this afternoon. Okay, and of course, I've been bitching for an hour, but I get one more. And my bitch for today is those who believe free money is free. Okay. Free money ain't free. Okay. Somebody is always paying for it, and you know who's paying for it, right?
There's no free lunch in anything in life.
We're right. We're always
nothing's free.
Paying for it. Okay. And
there's a price for everything.
There ain't nothing for nothing. And just remember that always.
It's physics. Listen, it's physics. For every action, there's an opposite reaction. It's physics. There's nothing that you do that happens that doesn't have an effect. There's no free money. There's something on the other side. Everything has an effect.
Exactly. So in the meantime.
So when they say to you, hey, we're going to spend $3.5 trillion, it ain't going to cost a dime.
Yeah. Oh, yeah. It'll cost you nothing. Don't worry about it.
I hear that. You know, at this point, it's like I'm watching a comedy show. It's like I'm watching a Chappelle show. I start laughing.
It's unbelievable. And in the meantime, the indexes exploded or have been exploding higher. And, you know, we had 3 Mondays in a row, the markets got clocked and spent the rest of the week rallying. This week, we just went straight up right from the get-go. And look at this, right up against resistance. Now we have reversed and we're long. So now as I look at the Dow, I would have to call support at about 34,750. And we're at resistance right now, but certainly it has all the appearances of wine ahead to make new highs. And we're only about what, 1.5% away from new highs.
So let's say something about trend following here. Let's stop for a second and say something about trend following. Bubba just said there's no free lunch, okay? So when you're trying to follow trends in markets, you know, we're looking to capture the big move. We might get chopped up again here. The market might come down later in the week and we might reverse again. You pay, we are trying to catch the big move, and it's going to come, folks. It is going to come. There's no free lunch though. The payment for that is these chop ups. Just keep that in your mind. Don't get frustrated. Don't get frustrated.
All right.
The program.
That is for sure. Okay. In the meantime, 34,750 to 35.5. Okay, but we're not sellers now. Now we're buyers. The S&P, Echo Sierra, and again, right up, it came right down to support, bounced like a rocket ship, and here we are up at resistance, the first resistance. But again, we're not that far. You know, we're less than 2% from an all-time high in the S&P. Okay, now we could fall apart tomorrow, it could change, but for now, we have to assume it's going higher. Now, there's many that are going to comment on volume. Remember, okay, volume is nothing when it comes at the end of the day, because when they mark your portfolio to market, it doesn't matter if there was no volume. That's the mark. That's the money that either gets added or comes out of your accounts. Okay. In the meantime, 43.50 to 44 to 4,500, but most likely going higher. Okay. But expect, again, I would expect in the indexes right now, a little bit of sideways action. I don't know that they can continue at this same pace. Tommy, I'll answer that later. This is not the right time for it, but I will answer before I'm done today. Okay. In the meantime, 43.50, 4,500, and we'll see where we go. And the Nasdaq, November, Quebec, same thing, right? Everything's at resistance right now. We've had a giant, basically parabolic straight up move. Okay. But we're long here as well. Here you're looking at 15,000, which was resistance, right? It stopped there and then it exploded right through it. And again, you're looking, the new high is 15.6. You're less than, 2 point something away. Okay, so look for, it looks like it wants to test the highs. Whether or not it can take them out, we'll see. But again, right now we're long. And the Russell, Romeo Tango Yankee, remains in the highest torment. Okay. And as we keep looking, this pattern keeps resetting itself up over and over again, right? It's going to make a big move.
Let me ask, does everybody see the screens? Because there's a comment that someone's not seeing the screens. I just want to make sure people are seeing the screen.
I'm showing the screens.
I'm sorry, I'm seeing it here. So.
Yeah, everybody's seeing it.
Okay, good. Yeah. All good.
It just, yes. There's some that don't have.
Thank you.
No, nobody has to comment. I would know if there's a problem, and I did.
I just wanted to make sure because I saw that.
I got you. Okay, so look, we're now along this. It's just this is the most miserable torture pattern you can get, and it's just getting tight. What's happening is
it's a wedge. It's
winding tighter and tighter and tighter, which only means the move is going to be that much bigger. Okay, that's what it means. Okay,
which definitely feeds into what we said a little while ago.
Yep, 100%. And the VIX, here we are drifting lower. Remember what I said here? This is never a good move when you see a spike up in the VIX. We thought, a couple of weeks ago that it might be starting to trend, and we've broken back down again. It looks like we're going to test the lows in the VIX, which again, that's all this really means. It shouldn't be called the VIX index. It should be called the complacency index.
Yeah, it is. Okay. Because fear and greed run to the dollar and the bonds.
Right.
Fear.
Exactly.
Yeah, those are the fear indexes.
In the meantime, Apple, pop, I get all these words in my mind. Alpha, Papa, Lima.
Apple.
Okay. We're still short, but certainly we are probably in that area where we might be getting ready to break out. for tonight, right now, I mean, we're right at resistance, and certainly, if I look, and if you remember what I tell you, that all patterns repeat themselves and all charts are the same. To me, if I were a betting man, which I guys know I don't gamble, but I would bet this may be changing in the morning. Okay. Of course, you'll know, I'll send it out, but I don't know yet, but I would assume, because it looks like we've got some pretty good support around 143, and it looks like 143 to 147 for now. And they do have earnings next week. So we'll see what it looks like. It's in congestion, but it does look like it's held to 140 very solidly, and it could be headed up towards the highs. So, but for now, for this moment, we're still short. So I'm not going to, tell you to do anything else. I'm going to tell you to wait.
Did you give Connie levels on the Russell?
I probably didn't.
Okay. I called you Studley. I like that.
I probably didn't give him because I'm so irritated that it won't move anywhere. 2,200 to 2,300. It won't go. It's so frustrating to watch it. It makes me, very angry. Anyways.
Did you give her Apple? Now she'll ask for Apple next.
Apple I gave her 143 to 147.
Okay. All right. I'm keeping you on track.
You keep me on track. Okay. And it appears a new law in California end up causing a majority of mowers and blowers to be battery powered. So landscaping companies will need a lot of batteries. Will this crazy law affect the battery metals?
Let me tell you something. As someone who's had a lot of lawn, battery powered mowers work horribly. Gasoline powered motors and leaf blowers are the bomb. They work.
Right.
And now technology is going to have to invent something that works like a gasoline power, but there ain't no battery powered mower that I know of that I've ever seen that works well. So, that's going to have to, maybe you're right, Tom. Maybe you will see more batteries, metals, in the future, and they'll have to come up with some new things. But I have a feeling that, by the time 2014 rolls around, that law might be
2004. You mean 2024?
2024.
2014. Bring me back to there and tell me what was going to happen.
That law, to me, that whole law is ridiculous.
Right.
The whole thing. The rest of the country ain't copying that.
So, in the meantime, Alpha Michael Delta AMD, and we are long. Of course, we reversed at like 106 after we broke out. And again, notice it held its support level. Popped and is going a little bit too rapidly higher, but it is going up. And I would suspect that probably somewhere near around 120 is going to be some resistance. And don't be surprised if you get a little bit of a pullback, probably let's say to 110. And I would make this 110 to 120 for right now, but we are long. Okay. Bravo Alpha, even Baba we're long now. Okay. And we had that huge spike up and then followed by another spike up. And notice, now this is what I'm talking about, okay? Notice that it hasn't broken back down, and what it's really doing is it's pausing, okay, in some tight ranges that we would assume, based on the fact that we're long, that it's going to break up to the next level now, okay? And again, it could go down. There is no guarantees, but this is a action that you expect after you get a parabolic move from 140 to 170. You expect some sideways action.
That's the Munger move.
Okay, right.
Munger move.
Munger, who created.
By the way, I'm happy to hear that someone likes their electric mower. That's good. I have to, let me do a little bit more looking into that. But
listen. When's the last time you actually cut grass?
A while ago.
Okay, they might have gotten.
I live in the desert. I don't cut grass yet.
Well, I don't have grass, so
I don't have grass either. I have rock.
And they pay us to take the artificial in the front too. So there you go.
But I do use a leaf blower.
Yeah, I don't have that either. Anyways, BitQ, Bravo India Tango Quebec. Okay, and we came off the bottom of 21, which we thought might be the case. And again, this is the reason we cover BitQ. This is one of the 3 or 4 choices for those of you who want to play in the crypto space.
Soup.
I mean, that's the reason we put those in. Baba was I probably didn't give you that either, but 160 to 180. Okay. This is a way, if you're afraid of the digital wallets and all the stuff that goes along with it. Now, I met with a kid on Saturday I saw that was brilliant and understood all that, but I don't understand it either. And this is a way to play Bitcoin on a stock, and there's more coming on an ETF that is actually has some regulatory bodies behind it. And it now looks to me that this is probably 24, believe it or not, 24 to 26 until it can break out. And it certainly did not have as big a move, but it has had a fairly nice move from the bottoms. Okay. And if you add zeros and make this 21,000, 21 to 25, okay, and you multiply it by 2, it's very similar from Bitcoin of 50 to 60. Okay. So in the meantime, 24 to 26, CGC, they will not legalize pot. I don't know why. We say this every week. We are short this in the portfolios, but this is not tradable except for one thing. If you want to gamble that pot will be legalized at some point, this is one of the 3 plays that we offer you and show you, okay, because we all believe that it has to be federally legalized, which would clean up these companies, allow them to make money, okay, and allow them to do things that they cannot do now and quit their cash burn and actually make money, which would make money for the banks. It would make money for everybody. So it's actually ignorant that they're not federally legalized. And there's got to be a reason, Andy.
And these stocks are feeling the burn. They're feeling the cash burn, you know?
Right. And I don't know why they won't legalize it. Doesn't make sense, but
we opined on that. We thought that maybe, you know, the powers that be want to see Altria or the big alcohol companies control this business, and they want to see all these companies go bye-bye.
Maybe. We never know. Okay.
Lobby.
Chewy, Charlie Hotel Whiskey Yankee. Okay, now we're still short this, but again, it did come, you know, off of a nice bottom, and you know, this is.
I predict we'll be long this again soon.
Oh, I agree. This held a higher support level than we thought it would go to, and
here's a perfect example of a stock why the hedge is so beautiful, because Bub and I both love this stock, and we own this stock, and by hedging this stock, when you go through a period like we went through, where this thing dropped from 97.5 to almost $60. You know, with the hedge program, you accumulate shares. So when it goes back up, you're longer and you're protected. I mean, it's the best of both worlds. If you're not in that program, I strongly recommend it.
Exactly. Okay. And so right now, I look at this at like 61 to 69. Okay. And again, this could be reversing shortly as well. Again, I don't get the signals until the middle of the night. Okay, when I run everything, so I won't know. But looking at this pattern, it would not shock me, okay, if it did reverse. I already own it, and I will continue. Now I'm short it in the portfolio, but I do own it in my hedging account. Okay, coin, Charlie Oscar India November. Well, there you go. Okay, right as we said, almost right on cue. We said last week that, you know, around 220, 230, 240, and here we are. We held and went sideways, and then suddenly, just like Bitcoin, out of nowhere, it exploded to the upside. So now, you know, 300 is going to be some resistance. Okay. The pace or the rate of change here is probably a little bit quick, which we would suspect. Now we could go up to 300, 305, whatever, and pull back. We could go sideways from here. I don't think that we're going straight down from here. I think that you're going to see some consolidation periods in many of these that have had big moves, including Bitcoin itself.
Yeah. Now I will tell you why I really like Coinbase. I think that this ETF gives way to new arbitrage business, and arbitrage means more volume. More volume is good for exchanges, and they're the bookies.
That's the truth. They get paid on both sides, and the busier and the more action in the market, the more
volume is the golden key.
And this has got suddenly, look at the volume. It suddenly picked up back to where it was in August, and then all the way back to when it was a new issue.
They're going to make a lot of money, this company.
Oh, I agree. Okay. In the meantime, 260 support, 300 resistance.
How are the options in that stock?
They're good. I mean, again,
that's good. So that's another candidate for the hedge program.
It's definitely a candidate for hedging. I mean, you know, we've got that one on. So
that's a beautiful candidate, because you know there is always that, you know, I call it the 10 standard deviation potential that the government closes down the whole business. So if you're in the hedge program and you own coin, You ain't going to lose that much if they close it down and that stock goes to zero. But if this thing continues to go the way we think it's going to go, this stock will do very well.
Right. Agreed. Curl F, this is another gambler, right? This is retail stores. I think they're based out of Massachusetts. This is all American, I believe. And again, they're dying. I mean, there's stores everywhere. When we started covering it, I see them everywhere. Curl F. Okay. Curleaf is the company. This is again, only a gamble. There's no levels here. It's a $10 stock. I don't typically trade these unless I'm gambling. I don't own any of this one because I can't. The only place I would buy it right now is my retirement account, and I can't buy it there. So, in the meantime, it is one that if you want to gamble or speculate, that if you get federal approval, this is going back to probably 30 or 40 or 50. Okay, but as long as they continue to hold back, it is going to continue to drift and burn. Okay, and not a burnout, but burn. Okay, DraftKings, Delta Kilo November Golf. Okay, and we're of course short this. Now this is to me, Andy, you and I both really like this company as well. This has found a bottom. Now I own it. Okay, in my hedging model, but to me, this is the pattern that I've been waiting for. I'd be waiting for anyways. To me, it may not be this week, it may not be next week, but I think we've seen their near-term lows. What do you think?
Yeah, I mean, it looks like a nice kind of double bottom area going back to August on the chart.
Yep.
So
it's
that would make some sense. But again, I like this stock in the hedge program.
Now, if you remember that all markets are born out of consolidation, okay, I expect a new market, and I don't expect DraftKings to be going lower, okay? And not because I own it, it's because the industry itself is exploding, okay? Have you noticed the new Caesars app being advertised now?
Oh, yeah.
There's gambling everywhere, and it's opening up state by state. Connecticut now will have an app starting tomorrow morning. You can bet on sports in an app, not live. So this is only growing, okay? So that's, what we like about this, plus the fantasy sports. So in the meantime, 48 to 50, a very tight range. Okay. And it's very hedgeable as well. Fast Foxtrot Alpha Sierra, we continue to be long. It continues to go higher. And the banks are expecting something, obviously. Okay. Because they can only be assuming higher rates, wouldn't you think?
Yeah. Oh, I mean, higher rates are good for the banks.
Yeah.
And everything is good. Everything's good for the banks. What might not be good for the banks will be Lael Brainerd as the head of
Lael Brainerd. Yeah. Hey, listen,
that might not be good for the banks.
Higher interest rates will mean more profit for banks,
right?
Because it allows them to widen the spread.
Let me tell you who else is no good for the banks. Elizabeth Warren is no good for the banks.
No, and this is new highs.
The banks
132 support. There is no resistance. Facebook, Foxtrot, Bravo has earnings. What this week or next week, Ken? I don't remember. Okay. In the meantime, it's really in consolidation, right? Okay. We're still short Facebook. Okay. It came off at 320. Okay. So what? Okay. We've been short since 382. Now, again, the 340 area is probably a pretty big level, and we'll see what happens. But right now, you're in consolidation, 320 to 340.
It seems like there's no silver bullet for Zuckerberg, huh?
Well, not yet, but earnings, we know the earnings are going to be good. Now, whether the stock,
they're always good.
Well, yeah, because they always underpromise and over-deliver.
Right, but they're just a money-making machine. I mean, I'm talking about the 60 Minutes, the Congress. Everyone hates Facebook, but that company makes a mint.
Anthony, I'll answer it in a little bit, buddy. Okay, because I have to ask you a question, but I want to finish these first.
Yeah, we also have to go over a stock for Tom.
Yes, SWK. First Solar, Foxtrot, Sierra, Lima, Romeo, and of course we're long this because we want to get those those sun-powered lawnmowers.
That's a good idea. Wind-powered lawnmowers. How about I'm going to put a nuclear reactor in my backyard and buy some uranium.
I mean, this this reached up to a pinnacle and it kind of made a double top. With it being an uptrend, we'd look to be buying the double bottom, and I would suspect somewhere around So for me, I'd be looking at like 100 to, the high at 108. Now, obviously, this stock was at one time over $300, believe it or not. But right now, it's like 100 to 108. Okay, and we are long. GDX, oh yeah, nice little pop suddenly. Now, what does this mean to you? With gold is virtually done.
I'm going to say the following, and
I want you to say the following.
I'm going to say the following, and I wrote it this morning. If you like gold here, the best place to be is in the GDX or GDXJ, because they're going to turbocharge, if you're right, and gold is going to go up. If you really like gold here. I mean, gold's doing nothing to me. It's sleeping. But I do like the action in the gold mining stocks. I think it's been good. And it's kind of telling me that gold could go higher here.
And they kind of lead the way.
Right. But and the thing is that if gold does blast off and it does get through 1800 and goes back to 1900, I can guarantee you, and I can't guarantee you anything, but chances are history tells us that the GDX and the GDXJ will give you a better percentage return than the metal.
Okay. And Facebook's earnings are a week from today. Just somebody took care of it. Thank you, sir. In the meantime, as I look at this chart, 33 should be some resistance. Okay. And 32 should be some support. Okay. Goldman Sachs, they had earnings, I believe, last week. And of course, naturally, blew it out the doors, which is what a surprise. Shocking. Okay. And of course, we're long it, even more shocking. And, again, basically, this is back to the 400 to 420 level. Okay. And, it's simply the best company in the industry. They are the best at what they do. And they'll suffer when the markets break down like every other company, and they will always prosper more than most, especially for the industry that they're in. What do you think?
The only risk that they run is the regulatory risk, the anti-Wall Street risk. That's their risk, but that's not a big risk, and they're going to always do better than everyone else.
Right. 400 to 420.
And they understand that, by the way. And that's why they put their CEOs in as Treasury Secretary, and all of their executives go into government, because it's a self-fulfilling prophecy.
Correct.
They protect themselves like no one else.
India Whiskey Michael, IWM, and this is in the same torture pattern as obviously the future is. We are now long this, which has been, just a pain in the ass, to be quite frank.
I tell you, Bubba, look, I look at this thing, I say higher lows, lower highs, big wedge pattern, big move. I don't know when.
How about a flag? Where's the captain? I want flag. I don't talk about those. I don't talk about that.
It's a wedge. It's a wedge. It's a big move. That's coming.
Right. So in the meantime, 224 to 230 would be what we're watching here. And the Mara, finally, look what happened the last couple of days.
You pointed out that was doing better. That was performing well. So the one that performed well really performed well.
And look what happened. Suddenly it took off, and we were watching it last week at 40. Now it's 50.
Right.
Okay. So this is almost going in percentage wise lockstep with Bitcoin. Okay, which makes sense since they're a miner. Okay. Now I would say probably 45 to 52. Okay. And, certainly it can go higher because it was over 60 at one point. Okay. So certainly, but right now, and again, remember, this straight up action needs to resolve itself a little bit. And that is normally done by going sideways if it's going to continue to go higher.
Right. But we have to remember that this is crypto, and, all bets are off in crypto. You never know. All bets are off. Crypto's tough.
November India Oscar, which we are now long. We've been short forever, and we are now long. Okay. And of course, it has popped very nicely. And I would suspect that probably 35 is probably some support, 36. And we're probably going to run, I would suspect, to 42 first, and we'll see. Okay, where it goes from there. But, this ties back, it is Chinese, but it is electronic vehicles. It's all the things that go with it. And, overall, it's well off the original highs, but it is moving nicely now. And again, we're going to see where it goes. In the meantime, from now, 35, 36 to 42. And Nougat, November Uniform Golf Tango. Okay, now this hit a reasonable move, but not as big as GDX, interestingly enough. Okay.
Oh, this is GD, but this is oh yeah, not as big as GDX. It's this thing has suffered. This thing has suffered, and it's suffered a lot of decay. Don't forget, this is GDX on steroids. That's all.
Yeah,
It is.
and that's for those of you who try to trade these. These are never long-term holds. These ETFs, these leverage, these are reset every day. Okay.
Bubba, can you throw up there the long-term shot? That'll be the best thing. Just go back all. Go to all. There it is. That's why.
Yeah.
There it is. It's a wasting
90,000. Okay.
It's a wasting asset. The bottom line is they use options. The options expire. They suffer reverse splits. This is if you like gold in the next week, okay, you could use this. Anything other than that, don't.
Exactly, because this is a reset to a factor.
Right.
Okay.
It's like buying a call option.
Tommy, why'd you take your question down from silver? I'll answer it. I just have to wait till I finish what I'm doing. Anyways, and I didn't give you levels. I know now. I know that for sure. I didn't do there. Right now, as it looks today, 48 to 55.
Yeah.
48 to 55. Okay. NVIDIA, November Victor Delta Alpha. We are long. Okay. And notice where it came off the bottoms. And it's now looking like it wants to head probably back to 230.
The pretty chips. Those are the pretty chips.
I mean, this is really, again, this is not the ideal pattern when you're looking at it, because you can see it's basically stuck from 190, 200 to 230. Okay. It's just, it's gonna make a much bigger move, and it'll either be 100 or 300 one of these days. But right now, it's really kind of stuck. Okay. But we came out of a much narrower range, and now we're in a wider range, but still consolidation, which is still what you're in. You're just in wider sweeping consolidation, is never fun and never good. Okay. But we are long, and I would look at this right now at 210 to 230. Okay. Penn, Papa Echo, November. Okay. And we are still short Penn. So interesting. We are short the gambling stocks, although Andy and I both like him. Now, the difference between Penn and DraftKings, this is tied more to Barstool Sports, if you've heard of them, but it's also tied to the horse racing industry, not the fantasy industry. But again, the gambling apps are growing faster than any other industry in the world. Okay. And the legalization state by state is continuing to grow very quickly, and wait until New York and California approve them. Okay. In the meantime, I'd say this is 80 resistance. They have earnings, I think, in the next couple, and I think the 5th of November. Right now, 70 to 80. What I'm watching, which is exactly the consolidation. The only kind of bullish case, which I'm not going to make, but that's the only bullish kind of case I can make for it. But it's got to get through 80 and continue to trend. The Qs, Quebec, and of course we're long, and we're now approaching a major area that based on what's going on, it should break out. 374. Again, the overall parabolic move probably needs to be resolved and revert back or go sideways, because if you draw these lines into infinity, okay, if this stays here for 2 weeks within this range, this line would catch it. Okay. And that's what you want to remember about these things, is they don't have to go straight down. They don't have to go straight up. That they can go sideways until they get, so to speak, back on track. Okay. And even if you go back in history here, you can see every time we escaped, we came back to the line. Every time we escaped, we came back. And that's what you're going to expect. So don't be surprised. We are long, and I would make the levels here 364 to 375. Okay. But in the meantime, keep an eye on it, and don't be surprised if it does turn sideways. Riot, Romeo, India, Oscar, Tango. And this is not, it's performed better, but nowhere near as well as Mara, which is a similar company. Okay. In fact, I was surprised. I think this is the miner in Nevada, is it not?
Right? I forgot
too. One's in Colorado, but either way, this is not performed very well.
Yeah.
And when you compare it to Bitcoin itself, and certainly when you compare it to Mara, In the meantime,
I think they're Colorado.
this held at 30, which tells me 30 is support, is resistance, and 25 is support. Okay, now certainly this at one time was 30% or 40% above Mara, and it could happen again. But if it does break out, it could be in for a long run. But right now, it is 30, looks to be a resistance.
Don't forget, energy is a big input.
Yeah.
Big input.
And it's getting higher.
Oh, yeah. Oh, by the way, just because natural gas prices dropped to below $5, it doesn't mean that your gas bill's going down.
No, you're wait till you see your first heating bill this winter.
Right. Exactly.
In the meantime, Roku, which we're still short, and it did hold 320. Okay, so this, to me, again, I don't know when this will change. I would not be surprised if it's a change tomorrow. This is resistance right now at 345-ish. Okay, but this is, again, this is very similar to the DraftKings. You know, they find stocks, futures, everything finds a level in which the word consolidates, and then from that consolidation makes the decision of where it's going to go next. Now, if we go back here a couple of weeks, you can see that it consolidated and broke to the downside. So again, now it looks like we might be breaking to the upside. In the meantime, we're still short until I say different. For right now, it's 320 to 345. Okay. And the SPY, Sierra Papa Yankee, well, again, like everything else, we're long and it's going up. And here is, 450 is probably the resistance level to watch. You're probably looking right now, 440 to 450. Okay. But again, same as the others. The speed in which you're going up is a little bit too fast. There's needs to be, and really the truth of the matter is, for the general well-being of the stock itself, sideways would be better and make the move stronger as it goes up. The more it extends, the weaker the rally actually is. Okay. Square dance, Sierra Quebec, which we are long, and this is also, now this is making that, ascending pattern right into resistance. Look, at the end of the day, we are long it now, and I would suspect that it's got a good chance to break out. Right now, the 255 would be some resistance or so, but certainly 270 is in the cards, and this can certainly move at that speed. I mean, all I have to do, if you're ever concerned at a level, all I have to do is look at the option market, okay, and see what the expectation of movement is over any given period of time. And Square in the next 11 days is expected to move $15. Okay, that's just the expectations based on what the options are trading. It's supposed to move $10 this week before the week is over. And that's plus or minus. We don't know which way, but it is plus or minus. Okay. In the meantime, 240 to 260. Tilray, and I will get your question when I'm finished all this. I'll go back to it for you, big boy. In the meantime, this is the third of our gambling stocks. Okay, this is pot related. They're Canadian based. Also own Aurora, which is American based. This stock was at one time 300. It's now paying on to its fingertips at 10. Okay.
Are they selling pot in the metaverse, Bubba?
they're selling pot in the metaverse, and they're getting real money for it too. That's why the stock keeps going down.
The metaverse thing really cracks me up. I'm sorry.
I don't blame you. So this is your gambling. You want to speculate. You want to gamble on something here. Okay, this is what you want to gamble on. The probability of them legalizing pot, and it doesn't have to necessarily have to be legalized right away. Just the talk and real talk, not the Schumer crap that was on a few months ago, but the real talk that it looks like it's serious, because this stuff will take off like a jackrabbit. Okay. Tango, Quebec, which we are along. And of course, this is the same as everything else. Okay. Resistance is probably 145. Okay. Support's probably 132. Okay. And we'll see. Again, I am expecting some of the stuff to go sideways, but again, you could see they could continue higher. In fact, if they continue higher from here at this rate, I would suggest the bigger meltdown is coming. Okay. If they don't kind of self-correct by consolidating for a little while, I would say that this rally is more bull than anything else, but we don't know that yet. But that's what should happen based on looking at charts. That's what should happen, is we should see some sideways actions before continuing up. Tesla don't care about nothing, and it went right through. Remember, we've been talking. And I won't trade this anymore because I've lost enough in Tesla, but I love their car. In the meantime, we're at 760. Now we're making newer highs over the last 3 months again.
Our boy is worth more than
He's the
Bill
richest
Gates
guy in the world.
and Buffett put together.
So, look, this is again, I would love to take a short position here as a trade. Okay. But I would only sell a call spread just because of the rate at which it's going up. But I ain't doing nothing with this. I don't trade anymore. I don't even look at it except on Monday nights with you guys.
It's like a freight train.
Yep. 840 support. I got no resistance right now. VXX, Victor X-ray, and we're still short and it still goes down. Okay. Now, in the next couple of weeks, if we get to 20, I'll be saying, and Andy will be saying, it's time to take a gamble. Okay. Right. But in the meantime, this is decaying like the option that it is. It continues to go lower. Okay. Because there is no fear and there's too much complacency. So from here, 22 should be some support, and 22 to 24. Okay. Getting in a tighter range.
This thing is decaying like the money in our bank and the cash in our bank account.
Exactly right. Exactly right. Win, Whiskey Yankee, November. And of course, this is long as well. And we did come off the bottoms. And again, as I commented all along, I'd love to find a spot to try and buy this. And look what happened. So we got a little bit of a bounce, but then we got consolidation. And then we finally got the breakup. Okay. So now the pullback is natural. And I would suspect that 88 to 89 is support. The next resistance is going to probably be 96. Okay. Or so. I expect to go back to 100 and then we'll see. Okay. Now they've got a new app coming out as well. And again, you think I'm kidding, but that's big stuff in this environment. Okay. Because the less people work, the more they gamble. XBI, X-Ray Bravo India. This is again, like everything else that's in consolidation, it's tormenting. Now we have no position in it, but it's, we said 122. Well, here we are. Okay.
The one thing I going back to Win for a minute.
Yeah.
The one thing I say about Win is, Win does track the Chinese economy. So, the bounce in the Chinese stocks was kind of good for Win and for
Las Vegas
Sands. Yeah. You gotta get that.
Macau.
Right.
122 to 128, same as I gave you last week. And Zoom. Okay, which unfortunately we're still short, but actually it's been a very good trade. But it did come down to 250, which we thought would be a good level. And right now it's probably 250 to 280.
You ain't gonna buy the bottom, and you ain't gonna sell the top.
No.
And we never tried.
Only if you're truly gambling can you do that. Okay. All right. So that's what we got to see. And now somebody asked me about Tilray. Okay. What would Michael Burry, he's a short Tesla, correct? He's probably right too. Okay. Thanks again for you and Andy. I have to start working. Okay, it's recorded, big boy. Okay, you get the recording. It'll be sent to you. If there's that's right. I forgot. You're right. You're way ahead of me. If there's any time today, could you give me your quick technical view on Australia? If I can get the symbol, I will. Give me
S32.
What's the S32? Is that okay? I don't know if I can get that, but I'll try.
And I know you got BHP.
Let's see. I'm going to try.
S32 South.
Oh yeah, ASX, right? Australian Stock Exchange. Okay.
There it is. All right.
Looks pretty good.
By the way, I didn't even have to see the chart, and I would tell you, base metals and coal at an all-time high. Base metals running through the roof. If they're not making money in this, there's something wrong with them.
Now, I would know if this was an American stock, I would say something that I wouldn't trade this as if I was gambling. But I don't know where all those trade. But this is the pattern here is dynamic. Okay, this is if you look at the Russell. This is what the Russell's in right now. This pattern. Okay, and look what happened. Bang. Okay, and this is very good action right here. I mean, if I were in it, okay, I'd be happy. If I was looking to buy it, I'd be looking for it to come back a little bit like the 375 or so. Okay, but I mean, if you bought it at 390, I wouldn't care either. Looks great.
It looks great.
Okay. All right, so I got to go to do this for my buddy who asked me first a long time ago, and then I got to answer a question on silver. Remind me to do the silver question, and then I'll do the rest.
Okay, yeah.
Tilray, excuse me.
Tilray, risk reversal.
Yeah, the risk reversal. Look, if you're going to go out and do a risk reversal all the way out there, you might as well buy the stock because you cannot buy the extra put going out that far, right? 2023 is what you said. Okay, you can't buy the put because it's too much unless you want to buy. You want to pay $1.30. Okay, but you know, if you did the 10 risk reversal, okay, so the 10 straight risk reversal is for 20% credit. You're putting up $1,000 per contract. So the only thing you can do to cut the margin down on that is to add the put. Okay. So now you only have to put up, you know, a $300. Okay. But you're paying $1.20 versus getting the 20% credit. Okay. So if I were to go to 2023, I would probably rather play this, you know, month to month starting now, because I'll get rewarded more handsomely, and I can make that similar trade like November 19th. Well, actually, I don't have to go here. I can do it right here. I don't have to reinvent the wheel. I can go right here to November 19th. Okay. And so I can do the same trade here for like even. Okay, but it's $300 a contract. Okay. So I don't have to pay the 120. Okay. Does that make sense, sir?
Yeah, I like that much better.
Okay. So that's the way I would play it. Okay. I would, because you'll get paid faster. You're giving up less premium. And I don't believe in Fibonacci golden ratios or retracements, but Andy might. I don't know. Do you?
Oh, I don't.
Look, I know three things that I've used my entire life, and that is the phases of the market and the price action. And the rest, I don't even, somebody asked me about.
And as far as Tilray is concerned, it's all about Washington. That's
Right.
it. Finished. It's a gamble on Washington. Finished.
Exactly right. And you know how dangerous that is. So somebody asked me a couple of times, but silver, when will the banks cover their shorts in silver? And Andy, I'm going to ask you, you know better, but I'm going to give you my comment first. I would venture to say that the banks are really not short silver in the physical sense. And I would think if you took their net positions, they're probably long, even though they're short futures like crazy.
They're short futures against long hedging packages from mining companies. And the more base metals, copper, lead, zinc coming out of the ground, the more they're going to be hedging their silver out. And when they hedge their silver, the dealers buy it from them and they go short the exchange against it, and they ride the curve, and their big short positions are covered by longs from miners. I have had a lot of arguments with people, and you know, there's a lot of people who believe in conspiracy theories out there. I was in that business. I know that those positions. The bottom line is that they're balanced. To whether they're long or they're short, that can change based on their market views and whatever they see. But the big shorts that you see from the JP Morgans and the big banks, these are hedges. They have longs on the other side. That's my opinion.
That's what that was my opinion. So thank you. So I don't think they're ever going to cover until they decide that they want to get extra.
They cover when they cover when the producers deliver, or when they cover their hedges. And they never cover their hedges because all they do is roll it out, because they cover their hedge and then they're hedging the next year out.
Right. So that's my answer. That's Andy's answer. That's we're
At least we're in sync.
We're incognito, in sync with that answer. And then Stone, Sierra Tango, November Echo. Stone, what is this? I didn't know that. You know, one thing about you come up with stuff I've never heard of. In the meantime, this looks pretty rotten overall, but you now might be at a spot that it might be worth taking a look. You got the little lift off. You got the little spike. The key is going to break above 37, 38 and hold. Okay. And if it can get above 40, I think you could be reversing trend and being off to the races. Okay. That would be my view here right now. This is not a buy in my eyes at this level. Okay. It would have to give me more proof. This is still in a downtrend the way I look at it until proven otherwise.
SWK.
Okay. SWK, right? I did that for time.
Our buddy.
My boy, my man, my genius.
Black and Decker. So batteries. He's got everyone 40 million lawnmowers being bought out there. Listen, it's possible. It's possible. No question about it.
You know, hey, certainly this is similar, right? It's been in a pretty solid downtrend. It might be reversing right here. You know, in my eyes, I'd have to see it above 184 and hold.
I wish there was a company that was smuggling gas-powered lawnmowers from Nevada into California. I would invest in that one. Or maybe the company that's going to build a wall between California and Nevada.
And there's no volume here, so it's very hard to trade. There's no weeklies. So, but I mean, I can see your point, and certainly they would. Listen, as we know, there'll be an innovator that will figure out a better way to do it, and then it'll end up in the hands of Black & Decker.
I would imagine Black & Decker is one of those companies really suffering from the chip shortage.
It could be.
Yeah. The action in the stock actually tells me that they're suffering from the chip shortage.
Yeah. Thanks, Tony. Listen, by the way, just the euro currency, Michael, is down 1 tick. Okay, it's on its low of the evening, and the rest of the industry are down. The Dow's down 44. The Nasdaq is on 18. S&P down 5, and the Russell down 43. Natural, nothing of concern or anything that just you would expect. This is actually a lower open is more bullish if the market's going higher. Okay. And I got to look at Boeing, right? Boeing, was that the other one? Boeing, Bravo.
BA.
I mean, Boeing has been kind of stuck. It's really been consolidating for months. I don't know. I'm not real bullish on the airline industry in general. Okay.
How can you be with higher oil prices? I mean, that's
not only high oil prices, but I don't think people are traveling. I think people are traveling more for leisure. I don't see the business travel coming back. I stand by that statement I've been making.
Stand by it.
I don't think it's ever going to reach the level that it was.
You're right.
I don't know if I'm right or not, but that's what I see. So
I think you're right.
I don't know that I'd want
to look at SQ, Brazil.
What's the difference? Is that different than SQ in Chicago?
SQ.
I don't. Is there a Brazil?
He says for Brazil. SQ BNB? For Brazil.
Is that Brazil's flag? BNB?
There he is. That's the man. He's going to start mining Bitcoin. Your boy Jack Dorsey.
There you go. I mean, this is in consolidation. Okay, very similar. Again, the prices are different, but the pattern is pretty similar, right?
Yeah.
Okay, let's take a look, right? So we look at here and here. Looks the same to me.
Yeah.
Only difference is numbers. AMRS. Alpha Michael Romeo Sierra. Okay. Again, I looked at this last week. I think it doesn't look very good, but it may be breaking out here. I mean, I don't know. I certainly am not an anxious buyer yet. Okay. It could be at some point.
Take a look at CCJ when you get a chance.
Stone is the Brazilian. Okay.
Okay.
All right. And the last one.
One more. CCJ.
Yeti. What's that? Oh, I got another one. Okay,
I'll look at uranium. Yeah.
Don't worry. I got it. Yeti. I don't know. They went out of the microphone business into the suitcase business, and it didn't serve them well. But 84 looks to be some support. 90 looks to be some resistance. I don't trade this. I never have, but if I was, I'd be selling it. That's all I can tell you. And was there one more that I needed?
Yeah, CCJ.
Which one? Oh, CCJ for you.
Kamiko.
For you. I'm looking for it on the
uranium, baby.
Kamiko. Yeah. Let's. I guess it's a funny story. I've been watching Kamiko forever. Okay. And it never goes anywhere. It goes up and down like this, but it's always there. I mean, I've been watching this. It's every time I look, it's around $25, $26.
You know what this looks like to me? This looks like coal.
Yeah.
It looks like the beginning of. It looks like coal looked a couple of months ago.
Yeah, it could be. Listen, it could be great.
Yeah, it's energy. Hey, it's energy.
Listen, uranium has been hotter than a firecracker. MKFG, Michael Kilo Foxtrot Golf. What are you giving me a $6 stock for? You got inside information here?
Woof.
If you got information, give it to me. If you don't have information, I don't want it. I don't look at $6 stocks. These are purely for gambling. It's like going to play blackjack at the casino.
That's a lotto tickets.
Okay. Do you have information here that I should know about?
Lotto tickets.
Okay. All right, kids, look, we went from being busier to being quieter again. Markets, again, obviously with the rally, we see a toning down of action. Okay, so we'll see, and that's just something to keep an eye on. But for now, it looks like the markets want to go higher. So there's no reason to step in front of them. Okay. Oh, more 3D printing. Okay. Makes sense. In the meantime, they'll put the 3D printing in the metaverse. Okay. And they'll 3D print me.
The metaverse. I love it.
All right, kids. Listen, again, be careful.
We'll do a whole show. Bubba, we'll do a whole show on the metaverse.
We'll
do a show in the metaverse.
Exactly. There's no reason to get overly anxious on either side of the market. Okay, we are bounced, we have reversed. But again, if we base it back on recent history, the markets are still kind of in consolidation, although the trends have changed. I would just suggest to be careful. And I think that the very active we are watching has once again slowed. So we're not going to be overly aggressive on anything right now. I think, I don't care if it's the fourth quarter. I don't care what they say on Fox, CNBC, or Bloomberg. Right now, the markets look like they're just teetering and on very narrow ranges and could reverse or go straight up either direction. I think if you try to get too big of a position and put yourself in a bad shape, you're going to end up in bad shape. And remember, you need to be hedged. In the meantime, as always, we thank you, Andy, brother, my man. I thank you.
Thank
and
you.
I'll see you tomorrow afternoon when you take me to the airport. Adios.
No problem.
Thanks, guys. Have a great day, everybody.
Take care.